There is a major warning sign that we need to start paying attention to on the U.S. housing market that signals that a home price crash is going to be coming next. And for a lot of places, we've already seen a home price crash, okay? Like half of the metros in the country are seeing year over year home price declines, but those price declines are going to start accelerating because of one big reason, and that is days on the market. And I want to thank Tony for sending this story over to me, because right now, out of 44 of the 50 largest metros in the United States, the homes are sitting on the market way too long. And funny enough, the hardest hit area for this in the entire United States is Miami, my hometown. But across the country, the typical home is spending 60 days on the market right now as of August, which is 7 days longer than a year ago, and it is now above pre-pandemic norms according to Realtor.com. Buyers can't afford today's prices. Mortgage rates remain elevated between 6 and 6.5%, even though that's historically normal. There's been a massive financial downturn in our economy in terms of people being able to actually keep up with today's cost of living. And at the same time, the supply has been building in the background, and there has been a steady stream of new construction that is pulling demand away from the existing homes. So most sellers are responding by either cutting their prices or pulling their listings off the market altogether, hoping to kind of wait it out, which is kind of a stupid plan, because there ain't going to be no waiting this out unless you have an extra 10 years to wait it out. Let's take a look at some of these numbers. In Miami, homes are taking up to 90 days to sell, up from 74 days last year. Orlando, homes are sitting on the market for about 77 days, up from 63 days a year ago. Tampa is at 77 days. Jacksonville's at 74 days. Austin, Texas is at 72 days. And you can see a lot of these places are in Florida. Not really a big surprise either, considering Florida is ground zero for the housing crash. And it's going to be interesting when I get back to Florida to see what's going on, boots on the ground over there, and see some of the ridiculous listings and the prices and the price cuts. I'm sure there's going to be a lot of stuff to see with that. And Miami right now is ground zero for home sellers taking their properties off the market in hopes for a better market next spring or whatever. And I have seen this so many times over there. They continue playing the same games and always somehow think that this time's going to be different, when in reality, this time is just worse. That's how it's different. Because at least in the past, when they did this, home prices were going up. Now they're pulling properties off the market in hopes to sell it for a better deal next year, while home prices in Miami are going down. So when they go to relist next year, if they don't relist at a lower price than what they're trying to sell it for now, they're just going to be wasting their time and their real estate agent's time. In fact, Miami saw 57 delistings compared to the 100 new listings that came out in July. So every time there's 100 new listings hitting the market, you have 57 sellers pulling their homes off the market. Nashville, Tennessee, however, is seeing the largest year-over-year increase in the time spent on the market, because Nashville homes are sitting on the market about 59 days right now, which is 21 days more than August of 2024, when it was only 38 days on the market. In Las Vegas, homes are sitting on the market for 56 days compared to 42 days a year ago. And we know that Las Vegas is a city that has been struggling tremendously right now, with tourism numbers down by a lot, now that Las Vegas is no longer a cheap, fun place to go. In fact, Las Vegas has seen their housing supply rise 31% year over year, which is the biggest increase of any major U.S. metro area, and it's approximately triple the national increase according to Redfin. So we are literally seeing a 2008 repeat right here when it comes to where the inventory is building the most and the fastest, where the prices are already coming down the most and the fastest right now. It is basically a mirror image of 2008. We saw this in Las Vegas back then. We saw this in Miami and throughout the rest of these Florida cities back then. Like, this is how it goes every single time. It's almost predictable. And these price reductions are really starting to show, because in Tampa, prices are down 6.2% from a year ago. Austin, Texas, prices are down 6%. Miami's down 4.6%. Orlando's down 4.3%. in Dallas, Texas is down 3.9%. All areas where days on the market is rising, inventory is rising, and price cuts are surging. So really any market where the price corrections are the steepest right now are the markets where we saw the largest amount of inventory increase compared to before the pandemic, which shouldn't come as a surprise. Realtor.com is expecting only 4 million transactions this year, which would definitely be lower than last year and will be a new all-time low for the past 30 years, going back to the early 1990s. Like literally the last 3 years in a row, if you count this year, have been the worst year in 30 years for housing sales, guys. What does that tell you about the current state of affairs with real estate? Even the economists at Realtor.com are stunned by this. Danielle Hale, she says that even with more homes on the market, buyer response has remained muted compared to what we'd expect from similar supply shifts in the past. Yeah, people want to say this time is different. It is different this time. People are completely tapped out, they're broke, and fed up with today's housing market. Nobody wants to pay these prices. Nobody's willing to say that your house is worth what you're asking for right now, in general. It's not like it's like that everywhere, but that seems to be the trend.